Hey guys, good morning everybody. Today is Friday, November 21st. Happy Friday, everyone. 6:26 right now. We got market opening up in about 4 minutes. Sorry, I got held back a little bit. So the Black Friday deal has just started for for TradingView. And I'm thinking whether I want to upgrade to the premium or to upgrade to the ultimate or stay at premium because it's just a big difference. Um, yeah, I'm kind of curious. I'm like looking at the differences between the two, and I don't really see a big difference. I mean, there used to be. I know there's like another type of chart, like a tick chart that's available. I'm just kind of curious to try that out to see what the tick chart looks like. Um, yeah, because like you can't do the tick chart unless you're on ultimate. I'm trying to figure out if there's anything else that is included in the ultimate, but I'm looking at the list and I don't really see anything. Hey, Karen, thanks, guys. Let me share this real quick. Okay, there we go. You guys can see my screen now. All right, guys. Good morning, everybody. So, good morning, guys. Today is Friday, November 21st. It is 6:27 right now. We got market opening up in about 3 minutes. Um, for today, we don't have the 629 entry listed on the list, so it's not going to be one of the algo entries. But like I was saying, so let me see if I could drag this over. If you guys use a link that is on the website for TradingView, and I'll send the link if you guys don't have it right now. But the Black Friday deal is going on right now, and this is like the best deal of the year. You know, it's 80% off or 70% off or whatever it may be. This is like the premium's the best deal. I always get this every year. It's super, super cheap because you compare, it's only 217 for a whole year. And if you pay full price, it is, I hate when they do this, when you try to check to what, like whatever it is, and then they only give you the monthly price, but they don't tell you how much it is for the whole year. Because it's a lot for the whole year if you're to do the math. Let's see. Um, So 56.49 times 12. Yeah, so it's 677 for premium, but if you buy it today within Black Friday, it's 217, so it's like 70% off. It's huge. Um, so yeah, I was trying to figure out what the differences were between the Ultimate and the Premium, but I just couldn't really find it. I have a list here of the things, but it doesn't really show that there's anything different. I mean, aside from like these things, parallel connections, et cetera, et cetera, et cetera, but nothing like special. So I'll look at that a little later, but that's kind of what I got caught up with, guys. Anyways, market's going to open up shortly in about 30 seconds, guys. Again, like I said, the opening entry here is not listed on the list at 629. If you guys want to take the 629 entry, typically it is against momentum. So depending on how this candle here closes, it is going to be a buy, of course. So if you guys want to take the 629 entry and you want to go against momentum, it's going to be a buy. If you want to go with momentum, it's going to be a sell. It's not on the list here, so it's not one of those target entries that we'll be looking for. There's a couple target entries that I'm actually paying attention to, 632, 639, 716, and that's what we'll be looking for. So, all right, morning, Maria. Morning, Karen. Morning, everybody. Looks like everybody's here so far. Market is now open. Got that big spike right there. So again, looking at the list here, first entry is going to be at 632. The 632 entry has a weighted average of 71%, overall 65%, buy percentage of 77, sell percentage of 54. It won 3 out of the 4 previous entries on Friday, and the direction for this trade is going to be for a buy. So with that being said, we will look to see how this here ends up moving, and then we'll see if it's something that we can get into, of course. Um, I mean, the buy is looking pretty decent if it keeps pushing up higher. This is the one thing we've been kind of concerned about, over the past couple of weeks, past couple months and whatnot. The volatility on open is just extremely large. I talked to Sam about this yesterday at the gym. Um, he's been getting chopped up like really early in the session. So like for a lot of people here, and you guys can see, look at this candle. Look at how big that candle is. It's extreme, right? So what I've been doing is I don't really take trades. Well, it's not new to me, but this is what I've been doing for a pretty long while now. I don't take trades like immediately on open. Like as good as the 632 candle looks, I personally don't think these are safe times to take entries, right? Within probably the first 5 minutes, because look at how volatile these candles are. Um, We talked about the slippage issues with NinjaTrader. It's not just with the hedge fund guys. Like, it would be understandable with the hedge fund because we're trading live funds and it's on the real market. But the thing with like other people like Sam and I discussed yesterday is he's trading Apex and he had like a 50-point slippage on his account. So it's not strictly with live accounts. It happens with just NinjaTrader in general and just the overall slippage in the market, right? So just keep that in mind, guys. You understand that slippage is a problem. And I have to be cautious with the hedge fund client accounts because slippage could be the difference between winning or losing the trade. If you guys remember the trade from I think last Monday, like this trade right here, like basically 80% or like 90% of the people won, and then like 10% of the people lost because of slippage. Just a few points of slippage could really affect whether your trade wins or loses. And if you have more than, 10, 15, 20 point slippage, that could really screw up the trade for you. So again, if the market's too volatile, like this is crazy right now, guys. Look at the ATR. ATR went from 20 or under 20, like 15 to 43. That's how volatile it is right now. So if you guys want to take this entry at 632, I mean, there's actually not going to be an entry because this is going to be for a buy with momentum. There's no bullish signal here, right? So there's actually no entry there for 632. So I know a lot of you guys want to take a trade all the time and you always want to be in something, but I try to I mean, it doesn't matter how I put this because it's gonna go in one ear out the other for most people. Is you have to understand when to sit out the market, right? For me personally, I know that this is not the type of market that I want to be in because it's way too volatile. It's easy to get stopped out and it's just not worth the risk, right? If you want to get into these positions, I would highly suggest you don't use a 20-point stop loss, right? Use a 40-point stop loss or a 50-point stop loss or a 60-point stop loss. Because with a 20-point stop loss, if the trade goes against you even just a little bit, you're screwed. Like, unfortunately, sad to say, but you're going to be screwed because slippage, say for example, you get a 10-point slippage and then price just goes against you even just for a second, you're going to get stopped out of that position, guys. A 20-point stop loss is not wide enough to for you to survive. Like it might look like it's wide enough for you to survive, like when you're looking at the trade here. But the thing is, again, if you get into slippage, then your stop loss gets even tighter and it goes against you just a little bit, you're going to get stopped out. Like there's no way around it really. You're going to get stopped out. So just, keep that in mind, guys. Let's see the chat real quick. Lila said Fab Friday, everyone. Yeah, let's make something today. Jonathan said, going to be taking only algo trades. I feel like I was only getting lucky with the breakout at open. Yeah, that's the problem with the breakout on open. That's why I personally don't like taking it very much, is because it's a tricky entry, of course, right? Especially because of the extreme volatility. Like again, the ATR right now is super, super high. And I'm not telling you guys this to scare you guys. I'm really telling you guys to look out for you because thing is, I don't want you guys to blow account. Well, blowing accounts is fine. If you're trading a prop firm, whatever, right? You blow an account, start another account. But you just don't want to be in that habit of continuously blowing accounts and then you get funded and then you don't get out of that habit and then you still kind of blow accounts further. Because I've seen this happen with a lot of people where they take risky trades, they pass their eval, and then they keep doing those risky trades once they pass eval, and then they just blow the account immediately thereafter. So just a couple things to pay attention to. You guys can, here's another thing like that Sam mentioned yesterday. Look at the wicks, guys. If you guys see here that there's very, very big wicks on both ends, this is a sign to be careful, right? Because when you see a lot of wicks on both ends like this shows you that there's uncertainty with the direction of price, right? You want to see full body candles. Like for example, see this full body candle right here at 430? It's a full body candle, right? There's maybe a wick on top, but for the most part, it's only wicked on one side. It's not wicking on both ends. When you see that the candles here are wicking on both ends like this shows you that there's uncertainty with the direction of price. And you don't want to be trading when there's uncertainty, right? It doesn't matter if you're trading, directional or sideways. You really don't want to be trading when price is wicking both ways because it can easily turn against you in an instant. So this trade right here at 635, this trade just came up right now. I'm not in the position, but it did just come up right there at 635. So I'm not in this right here, but it is running right now. I just wanted to show you guys that it came up right there. And again, see, like I just mentioned, see the big wicks on both ends? there's a lot of uncertainty. Like price can easily, so this is what I can see happening here. Price could easily end up spiking down and then shooting right back up, or it can just chop around for a bit before it shoots right up, right? I think this trade's going to play through, in my personal opinion, because it looks like price is shifting above the pivots. Just looking at the technical analysis right here, but it's having trouble holding above the pivots, right? See how it's rejecting all these wicks right here are rejecting off the pivots, right? So it's trying to get up there, but it doesn't have much power behind it. See that power is now building up. And again, like I mentioned earlier, the slippage here is a problem because look at how it pulled down. It retraced back about, let's see, it retraced back about 15 points or 14 points, right? So if you had 10-point slippage right there, you probably would have lost this trade, even though the trade is in profit. Right. It's just that's the fact of the matter right now. The problem is slippage because of the volatility. So this trade's about to hit, it looks like. Obviously, I would like it to hit. I would never fade my own analysis here. But if you incorporate slippage into this, it becomes a a really like tricky thing to kind of incorporate into your analysis there. If anything, I might just have to adjust the TP stop loss. So full TP right there on that, guys, at 635. The next target entry is going to be at 639, which is coming up shortly. So today's algo entries. So 632, there's no entry. 635, went for a plus 2R. 639. I don't think this is going to come up because we need a sell signal, right? So in order for you to have this entry right here at 639, we need to have a sell signal. There's no sell signal here. It needs to come up on this specific candle right now. Because you can see over here, this is with momentum for a sell, right? Has 68% probability weighted, 50% overall, 25 buy, 87% sell. It won 2 out of the 4 previous entries. In order for us to get a sell entry right here, we need to have a sell signal come up, and it's not looking like it's going to come up. So this is probably going to be a no entry. I could already assume it's going to be no entry and no entry there. See, this is the problem with this type of market here, is that there's just a lot of no entries. It's not the fact that the algo is not working, it's just the fact that there's a lot of no entries here, right? And I think that's the thing that kind of throws people off because they want to get into an entry. Everyone's itching to get into an entry. Myself, I'm itching to get into an entry, right? I've had no entries for this whole week, this whole month for that sake, right? The thing is, I don't have entries, but I also don't have losses. And I think that's the big thing that a lot of people are overlooking, right? The fact that we have no losses or we have losses, but we don't have like a lot of losses for November is actually a good thing. I'd rather have no trades and no losses versus trades and a lot of losses. Because I can stomach having a break-even month, but having a very, very red month, kind of similar to September, like I wouldn't be able to stomach this, right? Having a losing streak, like this would really mess with my trade psychology. I'd rather have a month like of obviously October, rather have a month like this, but for November here, I'd rather have a month with no trades than to have a bunch of red days. Because that would really screw with my trade psychology. And I wouldn't I wouldn't feel comfortable taking other trades. So let's see. Anyways, let's go back over here. I'm going to change this. This is the next one. And I feel like that's a mindset that a lot of people can't, they're not unable to develop, right? They're unable to develop that mindset of like, okay, it's okay to not have trades. Everybody's like, oh, I need to have a trade. I need to be in something. I need to have a win. I need to have a loss. The thing is, if you're taking more trades, guys, you're still going to be paying more in fees and commissions, right? You don't see it when you're trading a prop account, but when you're trading a live account, fees and commissions start to add up because you're paying for that out of pocket. And that makes the difference between, someone who trades with prop accounts and someone who trades with live money. Because you have to think about all of these other factors, right? Slippage, fees, commissions, etc. There's so many things that come to mind before you decide to take an entry, or before you decide to take a lot of entries for that sake. So, all right, 701 over here is the next opportunity for entry. That's gonna be a while from now. If you guys have any questions, feel free to hop into the chat. Hey, Lamar, morning. But let's see what we got over here. Hey, Raz, morning. Sam, morning. Let's see. Sam said, remember the dump yesterday? Be cautious. 44 ATR sitting. Yeah, so, even right here too, Sam is also sitting on his hands because the ATR is way too high. The volatility is way too high. It's just too high right now. It's not it's not a good thing to be messing with. If this is high for you guys, let's take a look at NQ real quick. I'm curious to see like how NQ is going to be moving with all of this volatility because this is very, very volatile for YM. But let's see NQ real quick. Look at this thing. This is a mess. Look at NQ right here. I can't imagine trading NQ. And it's funny because Glassman over here just said, "Hey, what's up, boss? As a new viewer, can I ask why you trade YM and not ES or NQ?" So here's an example of why I don't trade NQ. I don't know if there's a better example for why I don't trade NQ. Look how crazy this thing is. Super, super choppy and super, super volatile. Right? If you're trading NQ here, you get stopped out either way. It doesn't matter if you're taking buys or sells. That's crazy. Look at this range, guys. A 50 point, 500 point. That's freaking nuts. Look at that. Like, if you think YM was crazy this morning, look at NQ. It's a 500 point range, and it's literally a back and forth range. It's not even like oh, slow push up, slow push down. It's literally a 500 point boom, 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 boom. That's crazy right there. Look, and you compare this to like the previous. So here's a clear example of like why I don't trade NQ. Because of the extreme volatility on this. Right? If we're having trouble with volatility on YM being too volatile, look at NQ. This is crazy. 500 points. I can't imagine being stuck in a trade here. Like, we use a 2040 TP, stop loss TP for YM. If you're trading NQ, you need like a 500 to 1000 stop loss TP to survive any of this. And even in that situation, or not even, I mean, I guess you wouldn't have to have that. Maybe like closer to like 300, 600. But still, that's pretty big, right? Having a 300 point stop loss and then still having to climb your way back down further. Or in the opposite direction, if you're taking a buy here, can't imagine having to hold through this. But yeah, that's the main reason why I don't trade NQ. It's too volatile, it's too erratic, it's not very consistent. The thing with ES is it's too slow. So I think NQ and ES are on opposite spectrums. NQ is a little too fast, a little too volatile, too erratic. ES again here, same thing. It's a little slower in a sense. Like if you compare the movements here. ES, if I was to choose between ES or NQ, I would still go to ES. The thing with YM is that it's a good middle point, right? It's a good in between. If you look at YM over here, so again, right here, ES is still going sideways, but again, the range here isn't as crazy. It's still pretty crazy though, because this doesn't move usually this much. ES will probably move like maybe, like I think like 2 to 10 points maybe usually. If you just look back here, you can look at the average movement. So around like 20 points. I'd say like maybe 10 to 20 points on average. So right here, this is still abnormal movement for ES, but it's not as crazy as NQ. Now let's go back to YM. See, look at YM over here. It's ranging, but it's not like how it is for ES or NQ, right? NQ is like boom, 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 back and forth. At least for YM over here, it's choppy, but it's like going back and forth, right? It chops up, chops down, maybe chop back up. And there's some consistency here that you could find. But yeah, that's just, the quick explanation of like why I trade YM versus NQ and ES. And also I've been trading YM every morning for about over 8 years now. So every morning for the past 8 years between 6:30 and 8, I've been trading YM. So I've learned to understand how it moves, right? The more you trade one asset, the more you'll understand the price action and how it moves. And that's something that I've kind of developed with my edge. So, obviously, if I traded NQ for over 8 years, I'd probably understand that a lot better, but I haven't. So that's why I mainly trade YM here. All right, so the 639 entry, let's see. I think I saw Rev mention something about the 639 entry hitting for a sell. Yeah, so the 639 entry over here, I mean, obviously it was no entry, but if it did come up for a sell, it looks like it would have hit, right? This kind of goes back to what I was saying before, guys. We talked about this yesterday and over the past couple of days. Um, the thing is, the momentum factor over here, this isn't like super necessary. If you're able to read the price action, so let me go back over here real quick and I'll kind of show you guys how I would have read this price action here to anticipate the momentum before it actually came up. Because what we were looking for before this 639 entry came up is we were waiting for the candle here to close, right? We were waiting for it to close with a sell signal. Yeah, no, you're okay, Rev. And I want to go back to explain, like, because you were on the right track. It was just the sell signal didn't come up, right? So the thing with this right here is you can see how it started to establish a ceiling, and like I said, we needed that sell signal to come up before 639, right? So this is where it becomes hard because not everybody can read this the same way I do, right? I can read this because I created this momentum indicator, so I can see when momentum is shifting. So the way that I saw this over here, and here's like a little example of like how I can see the market starting to slow down. This is kind of how I read price action with regard to consolidation and reversal. So see how this green candle right here, just pay attention to this green candle right here, right? See how these three bodies are touching each other? This body right here, or I mean, you could even go from this one over here, from these. This is probably a better example. So let me take this off real quick. And you guys can see here how this body is touching this body and touching this body and touching this body, right? All these bodies are touching, basically all these five candles. This shows me that consolidation is happening right here because typically the bodies don't touch like that, like consecutively. Um, so with seeing these candles right here, these bodies, one, two, three, four, or five touching, this shows me that the volatility and the momentum is starting to die out just looking at, raw price action. And then with that being said, I mean, this still here wouldn't have been the confluence that I was looking for, but if I was to see a strong red candle follow up like this one right here, obviously this was the entry candle. If I saw this strong red candle come up, I would have expected a turnaround to happen here, right? So again, this is another thing that I was looking at. So look at this right here. See these three candles? Let me just draw structure right here. So see these three candles, they're not exactly touching, but they're sort of touching in a sense. I mean, this wouldn't be a strong, this is the only reason I'm looking at this is because there's such a strong green candle right there. But this candle right here is sort of touching with this one and the body. And you're looking at the body, not the wicks. So body is about four candles you're touching. It shows that the momentum here is dying out for a sell, and then it starts to turn around right here for a big, strong green candle, right? So in a situation like that, I could expect a green momentum to come up at some point, which obviously it came up on this candle. This one's too easy though. I wouldn't use this as an example um, to identify, reading raw price action to identify swing and momentum. But this is basically what I'm looking for in a sense. Like initially, I look for the consolidation for something like this, for the bodies to be touching, for price to kind of slow down. And if you want to use different terms, like a lot of people call this, I forget what the name's called, like people who trade smart money concepts, right? It's like accumulation, something, manipulation. I forget what the second one is, but yeah, basically that's kind of what you're looking for. And you're looking for accumulation, and then the second part, which is consolidation, there's another name for it, and then distribution, right? And it's pretty clear of like price action and auction theory. It's just people use different names for it. Right? I feel like smart money concepts, it's like the same thing that like people have been using for years. I use the same thing. It's just I call it uh okay, there. So Rashida just mentioned accumulation, manipulation, distribution. That's kind of what happens there, right? Accumulation, manipulation, price goes sideways, distribution the other way. There's different names for it. I mean, I've been trading for over 12 years now, and I've seen so many different types of names for that specific analysis. It's basically auction theory in a sense, but there's like a lot of different ways that people call it. For me personally, I just call it momentum, consolidation, reversal, or, in a sense, momentum, consolidation, momentum. I think that's probably the easiest way to really look at it because price pushes one way with momentum, consolidation happens where it slows down, and then momentum the other way. Or it doesn't have to go the other way. Price can go momentum, consolidation, and then momentum back up. So just something to keep in mind, guys, if you guys are looking at stuff like that. I mean, you're gonna find different terms depending on who you're learning the concept from. Some people call it something different. Some people call it, there's so many different names, but I personally just like to call it what would I see, right? What I see is momentum, consolidation, momentum. And that just makes things easier. So there's no confusion there. Like for example, again, right here, right? Momentum pushes down, consolidation, momentum. Um, Okay, so there's no entries here until 7:01. Let's see. Any other questions here? Glenn's asking, Sean, what do you think about 7:02 trade, Sean? Maybe with a 80/40 TP stop loss? Possibly. The ATR here is not getting any lower, right? It's at 50 points right now. I think this is pretty crazy for a November. Like we're a week before Thanksgiving, and the volatility usually slows down around this time. It's not slowing down. It's getting higher and higher and higher. I think there's so much manipulation in the market right now that in a sense, we're kind of in a different type of market compared to last year. There's nothing wrong with it, but we are definitely in a different type of market compared to last year. But yes, if you want to take the trade at 7:02, Glenn, you can take it with a wider TP stop loss. I think you're making the better decision there by taking it with, a bigger um, range versus taking a 40. A 40/20 is impossible right now, guys. I would never recommend anybody take a 40/20 right now because let me show you guys like for example, if you were to take a buy right here, this is gonna be really tough. Well, actually, wait, if the candles are regular like this, I don't think it's a big problem. But look at this big candle. Like, you'll have some big candles, then some really, really small ones, and then some huge ones that can easily just stop you out very, very quickly. So just something to keep in mind, right? Just be aware of the volatility because you might get some random spikes like this where price just kind of picks up and takes off. Let me check the news for today. So the weird thing with the market is that there's been like a lot of crazy movement, right? If you guys saw YM from yesterday, like here's the thing, there wasn't a lot of news that happened yesterday, but this thing came for a crazy free fall right here, right? I mean, I wasn't trading during this time, but I did see it after the fact. And this thing came for like a crazy free fall right here. There was no news, no Trump, no nothing. It dropped 1,000 points. Um, I know a lot of there's always going to be speculation. I look everywhere and I see what people say and they want to sound like they know what they're talking about. But a lot of people did not predict this big drop to happen, right? A lot of people will talk after it happens, but you never see anybody say, "Oh, look for why I'm going to drop 1,000 points in the next hour." Nobody says that. But yeah, I thought this was really unusual to see this big dump like this during this period. There's no like planned news yesterday, and that's what I'm trying to get across. There wasn't a catalyst that like maybe seeing a 100 point drop, a 200 point drop, maybe even a 500 point drop, but 1,000 point drop like this within an hour or 2 hours, that's a huge drop, right? Between 8 o'clock and 10 o'clock, basically. Huge drop right there. And I know there's going to be a lot of people who say they saw that coming or they knew that was going to happen or whatever, but for the most part, I don't think a lot of people knew that was going to happen. There's a lot of different factors with regard to fundamentals. People talk about the Japan bank rate or whatever interest rate and stuff like that, and that it was due to happen, which is understandable. But like, okay, those people that called it, why didn't they take the trade then? If that was the case, right? I always see it's funny when you see people who say they predicted something, but then you're like, oh, well, did you take the trade? And they're like, no, I didn't. Well, if you knew it was going to happen, then why didn't you take the trade? Uh, so just, something to keep in mind, guys, if you're listening to other people's analysis, if someone calls something and they take it, great, right? They were spot on. But if someone calls it, but they didn't take the trade, did they really know? Because if they knew, then they would have taken the trade, of course. Um, all right, so other than this, guys, let's see what we got over here. Let's see. A lot is asking, Sean, what is your settings for the trailing stop indicator? Your number is different than mine. I have it set to 7 because the thing is that it's so volatile that I don't want to I want to know what's happening right now, right? Like right here, right now. If you have it set at 14, the default, it'll probably be like a little different. Let's see, I have it defaulted over here. It's at 47. It's not a big difference. I mean, you just want to see what's happening right now, right? You want to make sure that you're close to like what's actually happening. So it's only off by a few points. I just have it set to 7 because of volatility. Like, if you have it set to 14, it's gonna have an average of like the past 14 candles. I want to see what's happening like right here, right now, which is very, very volatile, of course. Yeah, iPhone, it's set to 7, I believe. Let me see. Yeah, 7. But if you set it to 14, it's not going to make a huge difference. You're just going to see this change very quickly. It's going to change a lot quicker than than if you have it at 14. When the market's moving more consistent and it's not having these like crazy big candles that pop up out of nowhere, 14 is great. But because we have these kind of random candles that pop up, I have it set to 7 so I can see where it's moving like right now. So again, we have this entry coming up at 7:01, guys. This is a non-targeted entry, but it is on the list of entries for today. Um, and these are crazy candles, guys. Again, right here, another huge candle coming up. 80-point candles right here. So like I said, guys, this is a problem because of slippage, right? If you enter a position and hit your stop loss and it blasts right through, I mean, you're not going to have a 20-point stop loss. Your stop loss is going to hit like maybe 30 or 40 points. You're going to end up being at a way big disadvantage than what you normally would be at. I don't know how long this is going to hold for, right? I don't know how long this crazy volatility is going to be around. I don't know if it's just a 1 day thing, a couple days thing, a week thing, or if this is going to be the norm. The thing is, the market's always changing and the algo is adapting with the market. So if that's the case, adjustments might need to be made as this volatility sticks around. But what I've noticed is that after 7 o'clock, the market starts to slow down a little bit and it doesn't have like this crazy ATR. So like from yesterday, we had this crazy ATR, like 40, 50 points, etc. And then when 7 o'clock came around, it started to slow down back to like 25. So just, you gotta play the market as is. And what I mean by that is like you have to like understand how the market's moving right now. Understand if the volatility is too high, it's probably best to sit out the market, right? It's probably best to sit out the market than to try to like force something here and take a really big loss. I think that's the worst part, right? The worst part is you try to take a risk there and you have a 20-point stop loss. And instead of having that 20-point stop loss because there's slippage, you end up getting stopped out way down here. And I've seen this happen even with my own accounts, right? Price comes up, stops you out, but then it blasts right through. It actually closes you out here and then it comes right back up. That's probably the worst feeling when it stops you out and it goes straight to your target, but then your stop is doesn't get held and you get pushed way back farther than you wanted to. Let's see. Sam said 46.55 is the 1 minute for value gap. Lots of liquidity below. Like what like to see what happens at the FVG. Okay, cool. Let me look through my main chart real quick. I mean, it's very, very volatile right now, but I'm going to mark up structure over here on this side. So I have a resistance point at right here. So I have a resistance point right there. I have a couple support levels there, there. I mean, these support levels would probably be irrelevant, but I'm just going to put them there anyways. Support level. It's there. And then we have a couple levels of so I had a fair value gap, right? This might be lined up with, I mean, this is probably getting invalidated. It's an imbalance right there. Looks like it's getting invalidated anyways. Another one right here. So I got two imbalances right here. It's retesting these two levels. All right, back to our chart here. So the 701 entry is it's for a sell. It's going to be with momentum. There's no sell momentum here, so it's going to be a no entry. This is one thing that we've been running into a lot. for the past couple of days, if not the past week or so. A lot of no entries. I know this is frustrating for a lot of people because you want to take an entry, but I mean, if you want to, I mean, feel free. There's still opportunity there. It's just for my setup that I'm looking for, there's no entry there, right? So again, if you want to take the entry there, take it at your own risk. I mean, looking at this so far, I don't see the consolidation happening here yet. Like I talked about earlier, you want to see like about 3 or 4 bodies kind of line up with each other to show that the volatility is starting to flatten out. And then from there, look for the reversal. Right here, I don't see that. There's only 2 candles here. There's not like 3 or 4 candles touching. Like for example, right here, this is 1, 2, 3, reversal. Right here again, 1, 2, 3, reversal. There's only 2 candles right here. So if you guys want to take that trade again, feel free to take it at your own risk. There's no entry there, but if you do want to take it, the probabilities here are pretty high for a sell, right? We have a 63 weighted probability, 50% overall, 27 buy, 77 sell. It won 2 out of the 4 previous entries, and that's what it's looking like right now. So you see here, our price is pushing down a little bit. We could follow it and we can kind of see where it's at. But again, I'm looking out for you guys. Like, I'm not trying to scare you guys from getting into an entry, but I'm telling you guys what I see here on the chart. And there goes the sell right there as price pushes down, right? I'm not in the position here, but this is the sell that would have been taken if there was a sell signal there, if I saw momentum starting to shift down. The trend's bearish right here. So, I mean, it does look like it probably would have set up pretty nicely, but like I said, it doesn't meet my criteria. So it's a no entry for me. But if you wanted to just go by the probabilities of a sell here, it has a 77.78 probability of it pushing down at this very specific time, right? So just something to keep in mind, guys. Just something to keep in mind for those of you who are looking. Rashida said, YM is still in my range, not taking nothing until we break out. Yeah, I'm in the same boat as you, Rashida. For one, it's in a range. For two, the volatility is just a little too high. I'm hoping by the time we get to 716, though, we'll have opportunity there. That's my next target entry, of course, right? So my next target entry is going to be at 718. That's kind of what I'm looking for. I'm hoping that we get something at that point. If we don't, again, this might be a week with no trades for me, which I'm completely fine. I'm okay with taking no trades, but also having no losses. I think that's the key thing, right? Being able to protect your capital during a week and during a time like this where the market's just not there for you. Another thing too, like I talked about this with a couple other people in the group who are applying, their own type of strategy, but following us on the live sessions. There's a few people who they've had a pretty good November so far, but they had a really bad October. They took a bunch of losses in October, and it just goes to show that it doesn't matter which strategy you're applying. If the market works in your favor for your specific strategy, then great. You can take those types of entries. You're going to have some good months, you're going to have some bad months. As long as you stick to your strategy and you have an edge, it can be perfectly fine. So there goes that entry at 701. Like I said, in a sense, you don't have to go with momentum here. We talked about this yesterday and over the past couple of days. Like if you were to just ignore this, and I don't want you guys to make drastic changes to your trading just because I mentioned this, right? Because this isn't necessarily um, what I would consider a great thing, right? I mean, this is something that if you feel comfortable with it and you think this is something that you want to do, then, great, so be it. Go ahead and do it. But, if you were to just go off the probabilities, no momentum, but just going off probabilities of like the direction of price, whether to sell or whether to buy, you can see over here, this is a clear example that over here it had a 77.78 probability for a sell. And you can see here that the price did sell off. If you want to just go off the probabilities, again, my strategy is based off momentum. So I would maybe be okay with that if I saw the momentum here shifting, but I didn't see that myself. Right, price pretty much got to a resistance point right here, bounced directly off, came right down to full target right there, no drawdown. So, I'll try to explain to you and have you guys understand this, but again, if you're going to do that, take it at your own risk and understand that you're taking something that's not followed, right? You're kind of taking something at face value. But I just wanted to show you here that in a situation like this, if you just want to go off the probabilities, right? If you just want to go off the probabilities over here of buy or sell, you can do that. That's possible. Because we had this question yesterday. We had a couple people who were taking trades just off the probabilities and not off momentum, and they were winning trades, of course. But then again, if you lose trades, don't be upset that you're losing a trade, but that you went off a different type of strategy because we don't have the data on that specifically, um, for just buys or for just sells. So, okay, guys, that's about it for right now. 702, there's another one right here. The sell did not come up. Like I said earlier, there's no momentum there. 702 is with momentum. Had a 63% probability weighted, 60% overall, 54 for buys, 66 for sells. It won 4 out of the 4 previous entries, and it was for a sell. But because there's no sell signal here, there's no entry at 702. So nothing there again, no entry. Man, as frustrating as this may be, I'm still glad I'm not taking losses. Right. I'm still glad I'm like more on the flat end versus taking losses here or taking unnecessary risk. Because if you take a lot of losses, it starts to really weigh on your trade psychology. It doesn't matter how long you've been trading. If you take a lot of losses, it makes you, for the most part, second guess your entries. Now I'm curious to see how NQ and all that's working. So right here, price is rejecting off these fair value gaps that was talked about earlier. Whether you want to call it a fair value gap, call it imbalance. Oh, here's one thing I wanted to talk about yesterday. If you guys remembered, so remember yesterday, price was up here, and I said if price was going to correct back down, it was going to push down to here to balance price. It's crazy how like literally after I said that, it went straight down to that price point right there on this candle. It came to balance out, and then it just dropped even further from there. It's pretty crazy to see something like that happen. So like whenever you see price come back to being balanced, you can look to see how price reacts. So for example, right here, price again is back at the balancing point, right? Well, now the price is here, it's either going to break through and drop further, or it's going to bounce off it and shoot right back up. So if you want to trade based off market profile, I mean, market profile is great in a sense if you're looking for something like that. But yeah, I mean, it just kind of depends on like what you're looking for in a sense. If anything, I think, if I'm using some sort of technical analysis, it'd probably be market profile would be the best option to just see where price is likely to push to. Because it always reacts off the point of control, which is the balancing point. So for example, again, right here, see how price kind of pushes away from the point of control. Once it gets balanced right here, it'll either push below it or bounce off it and come right back up. Most of the time it pushes right through it from what I've noticed lately. So for example, again, right here, see imbalance right there, price pushes through it further. Like if you're waiting for the confirmation, but it's not always the case, right? For example, over here, price pushes above it, retest, continues up higher. Price pushes through it right here, blasts right through. Price pushes right here, consolidates, then pushes through. Sam said, damn good feeling winning this shitty market. I know it is. So, even though we're just looking at this from from just looking into the market, it's still a good feeling that you're able to analyze the market properly, even though you're not in the position, right? Um, there's perfect rejections right here off the imbalances, right? I have all these imbalances marked up. These are sell imbalances, and price is respecting them. This doesn't necessarily mean they're good, but price is respecting them to some extent. There's another imbalance right here, actually, where price is currently in right now. So it's currently in a sell imbalance right now, actually. I mean, it just invalidated it, so never mind, but there was a sell imbalance that was setting up right here. We're currently now at a support level. Yeah, we're currently at a support, and you guys can see right here, this is kind of where price is now consolidating. We have an imbalance down here, which price kind of pushed out of already. All right, so we got price break and retesting off this imbalance. Price pushed up. There's a support level right here. Price is now kind of just ranging between the imbalance and the support level. This lines up with the same structure that I drew up over here on our algo chart, right? It's respecting the structure right here. This is kind of the midway point. Again, the next entry is at 716. I'm hoping we start to get either lower volatility or things starting to for the most part balance out with regard to volatility. So the volatility right now is still very high. It's at 47, close to 50. Let's see, Sam said just the rectangle on the chart can do so much damage, bro. I got the winning trade. Nice. I'm glad to see you locked that in, Sam. It's good. James is asking maybe we could document the data without the signal as well. Just off the data would be nice to see. Yeah, no, I'll ask him a siege when he comes back on because he could probably just run the algo uh and get the data. Doing it by hand is it's way too much work. I mean, even doing this by hand, uh tracking the algo entries. This is good because we're seeing it happen real time and we're able to update it on the chart or on the spreadsheet at least. But yeah, we want to get the historical data for just, buys or sells that have higher probability. I'll ask him siege once he comes back. I think he's away for today. But I'll ask him because if we can run that through, through Python and just get the data for that specifically, I think that'd be kind of good too. We would have to have some sort of threshold though. So I think the threshold would probably be above. I don't know. The threshold's kind of different. So for example, over here, maybe like above 70% threshold. I'll check. I'll check. I'll ask Masish. I'll actually message him right now. 713 right now. All right. I just asked Masish to run the test on that. So I guess. Um, yeah, so I'll have Mercedes run the back test on that. We'll get the data on it, see what the numbers are looking like. If that's something that you guys want to use, because there's going to be more entries if you do that. The only problem is I don't know if they're going to be good entries, of course. All right, so we got the entry coming up right here at 716. What I want to see here is I would like to see price start to kind of slow down. Unfortunately, I'm not seeing it slowing down over here anytime soon, guys. Like I'm looking over here and I would like to see, like I mentioned, 3 or 4 bodies kind of touching each other. And I'm not getting that here right now. As you guys can see, these candles over here were touching to show that price was going to flatten out. Let me see. So there's 3 candles right here. This one, and this one. These are all touching each other right here. So I would see this as price pushing up, retracing, consolidating, and then pushing back up further. However, for this entry over here at 716, this is going to be a sell entry, right? So, I mean, this is tough. The price action here is just not lining up with what I would preferably look for. If you guys do want to take the trade here, it looks like the trade is setting up for a sell because it is against momentum. So this trade is against momentum, has a 72% weighted average, 60% overall probability, 46% for buys, 85% for sells. It won 3 out of the 4 previous entries. So if you guys want to take this entry right here at 716, this entry is going to set up. Again, like I said, the price action isn't really showing me that price is ready to turn around for reversal. And looking at the wicks over here, there's a lot of wicks on both sides, right? A lot of big wicks, or not big wicks, but just wicks in general on top, and then a bunch of wicks over here. So it shows me that there's uncertainty with the direction of price. If you guys want to take this position here, the candle's closing in about 5 seconds. So if you guys want to take this here for a sell, this is going to be an entry. It's just one that I'm using my discretion to stay out of it. So there goes the sell position right there. It's currently running. But yeah, I use my discretion here to sit out of this position. It looks like it's about to hit target right there. Yep. Full TP. This is the only entry I was looking to get into today. I was really tempted to get into it, but I didn't because again I use my discretion. We've been talking about this over the past couple of days too. I need to remove my discretion, right? I think, but right now I don't like this type of market. So for me, it's hard to remove my discretion because I'm more so hesitant on entering these trades here. But again, that 716 entry right there did win. I'm glad it won. It shows that the algo here is working perfectly fine. It's just me using my discretion to sit out of these positions or is what's really killing my ability to enter these positions here. The thing is the ATR is so high. If the ATR wasn't this high and we started to get a slow turn against the trade, I would have been more comfortable. But because the ATR is so high, this throws me off because if, like I said, if price moves 40 points in one candle, this can easily stop out my 20 points stop loss right there. So if you guys caught that, nice work. Again, this was one of the actual target entries for today. But like I mentioned before, my discretion here is really cutting into my ability to get into these positions here. Because there's just so many other factors here, right? There's the choppiness, there's the volatility, there's the inconsistency with the movement of price. Um, Here's another thing too. So, this thing could have easily spiked in either direction, right? In the direction of the trade or with it. But another thing here is this just choppiness, right? Choppiness right here. So here, let me give you guys a couple. I'm going to list a list of things here of why I decided not to take this trade, why I decided to skip this winning entry. So one is I did not see price action show a slowdown to the upside. Two, ATR too high, um, possible price spike. There was a price spike, but it went in the direction of the trade. The other thing was choppy, consolidating market prior to entry. So these are like a couple of the main reasons why I decided to skip this one winning entry that was a target entry. For one, I didn't see price actions show a slowdown to the upside. So like I mentioned, I like to see how price starts to slow down right here. See how we have a momentum push, then it slows down and then it reverses, right? Same with this one over here. Price pushes up. You have about 3 or 4 candles here touching each other body-wise, slows down, and then reversal. For this one over here, I didn't see that happen, right? We had price kind of just go sideways for a long while here. Um, if I was to see price push up here and then slow down and then come down, okay, great. A situation like that, I'd feel more comfortable taking the position. Um, but we just didn't have that here. And look at these candles again. There's a bunch of random candles here. Not random candles, but random volatility, right? See how these candles are so small? And this is just me playing it smart because I've been in these markets for so many years that I understand that like when you see these big candles come out of nowhere like this, it's better to sit out than to take anything. This is a 100-point candle. There's no catalyst for this right here, right? You look at the news, there's nothing here really pushing price. It's really just market getting chopped up. There's no news right now at 7:20. Let's go to CNBC. Refresh this. I mean, this isn't going to affect the market, of course, but there's really no breaking news right now that's causing price to drop 100 points, right? There's just nothing here. There's no catalyst. So this was released, but this was like about 30 minutes ago. I don't think this here would specifically affect YM because Lilly is not part. Um, they're not part of the YM. And if anything, this is good for the economy and good for the market. So looking over here at the S&P news or there's some general news here, 7 minutes ago, this doesn't affect it specifically. So there's no news here within the past, couple minutes that would have caused price to dump 100 points, right? It just doesn't make sense why we're getting these extremely large candles. So I'm just giving my analysis of like why I decided not to take a trade. Like, of course, if you want to just take the trades based off the strategy, that's completely fine. That's the whole point of having a systematic strategy. But, I'm still going to incorporate my discretion into this, of course. But we'll see as price continues to move along. There's another entry over here. Let's see the 717. So it looks like they both actually worked out. Even the 717 over here went right back up. It's crazy how smart the algo is. Look at the algo. It identified both ways. So if you look at my algo over here for 717 or 716, that was a win. For 717, it was against or not against momentum, but I'm just talking about the percentages here for probability. See how this right here, this over here again at 717, it had a higher probability for a buy and price spiked right back up. So for here, the probability for 716 was for a sell and it came down 40 points. And then 717, the algo identified probability was high for a buy and it shot right back up for another 40 points. So with that being said, well, there was no entry there, but still, if the entry would have pushed in the direction of just probabilities and not momentum, that would have been the setup right there. Another trade's coming up here at 7:30. And I'm just documenting this so I can put this on the spreadsheet. And there we go. As price pushes back up. Let's see. PC said price never inverse at the 640 gap. Let's see. 640 gap you mentioned is right here. Yeah, I mean, price kind of sat at that 640 gap that you mentioned. It pretty much, I mean, it rejected a bunch of times off here though. So it didn't really make a big move there. I mean, looking at the gap that you mentioned, so like price came up right here. And this isn't me going into your analysis, PC. I'm just saying like this, this already came down. It did move 100 points. If this here never pushed 100 points, then I would totally agree with your analysis right there. But I mean, just looking at it, it already pushed that far. It's not like it went any further than it, right? And then what happened here then? Like, why did it push right back up? I'm just curious to see like your explanation for this here. Because if this, so like with your analysis, I would have, if this would have came down and then like dumped from here, then okay, great. I would say, yeah, you're right. But looking at this right here, this thing did push down, but it came right back up. So like, I mean, realistically, it looks like this was just a fake out and then it shot all the way back up. Like, I don't know how this right here could be explained though. It was a 100-point drop and then a 200 point correction immediately right after, right? Almost 300 points right there. See, this is what I mean about the market, guys. Like, it's just so unpredictable with regard to like what happens here. But I mean, what's the explanation for this? I don't know, but you're gonna say there's another gap right here that should have been filled. I'm just curious because I don't understand it. I mean, obviously you see something I don't see, but I mean, I don't know. That's a lot of volume, bro, for this here to because so this thing it's already pushed down quite a bit. Like if this here didn't actually reject off that point earlier, I would have been like, okay, that makes sense. But it already rejected off here about 100 points, right? I think this push to the upside is what's throwing me off even more. Like it's crazy. It's like the market is moving, but it's moving so volatile that it shakes everybody out, right? If you're taking a sell here and you chase this drop, and then this thing shot right back up, it would have stopped you out. If you would have chased the buy right here as price pushed up, it would have stopped you out to the downside. Like you have to have a really, really wide stop loss to really survive these entries, right? So for example, if you wanted to chase the buys right here, like say for example, price pushes up, you see the momentum right there. Like this thing would have stopped you out if you had an 80 point stop loss. You'd need like basically a 100 point stop loss to survive a lot of this stuff right here. Like you just would have to have a wider TP stop loss in a sense. And then again, right here, look how it's coming right back down. It doesn't really matter which direction you guys would be taking it because you take the buy here, you get stopped out. You take the sell here, you get stopped out. Let's see how far this thing's coming right back down. Another 100 points basically. All right. Yeah, and like PC mentioned, yeah, easy range day today. Yeah, I mean this is price is in a range. I agree with you on that one. I can't argue with you on that one because I do see the range there, right? I do see the range there. And it's always good to have different perspectives, right, guys? Like, there's no one way to analyze the market. Of course, there's a ton of different ways to analyze it. It's always good to see other people's outlook on the market and what they see and what they kind of explain, because then it forms your own opinion and analysis, right? If you see someone's analysis and it goes against yours, that's completely fine, right? Think outside the box, see what they're seeing, and understand how does that tie in with your own analysis, and then sometimes like right now, PC mentioned that we're in a range bound market. We already knew that was going to be the case, right? We already saw this as a range bound market from market open, but now it's even more clear because you see how price is respecting these levels for the most part. It's just the range bound market is, where do you catch the bounces, right? Like for example, price didn't break this structure prior. How do you catch those sweeps, right? If you're looking up here. I mean, yeah, of course you see the sweep. Like I see the sweep now because it already happened. But prior, someone took the sweep from this level right here that was untested, basically for a double top. It's so easy to get stopped out at these points. Because right there, like, yeah, if you're like, okay, this is going to be the case and you didn't have this level marked up yet, if you took the sell right here, you basically would have gone stopped out in a sense. But, like I agree with PC, we are in a range bound market. That's why for me, I'm very cautious about my entries here because these aren't range bound entries, right? These are algo entries that are based off momentum. Gotcha. So Masih said yes, he has the data, it does make a difference in about 2% of the problem, about 2%, but the problem is uh the Sharpe ratio outweighs it, which means the reward is not worth the inconsistency. It's more simple. In more simple terms, basically, when you add the filter, you're overfitting too much. It does yield a higher win rate though, so you can add it. Yeah, so Masij did the test on the just momentum direction. He said that like the win ratio obviously goes up higher, but it doesn't the Sharpe ratio is not as good. So like you have more entries, but the quality of the trades and the quality of your long-term profitability is not going to be as any better than it is with just taking the regular trades with momentum, which makes sense. I agree with Masij on that. See, the problem with the momentum here is that sometimes it lags, right? Or a lot of times it lags. It's a lagging indicator, just like every other one. Um, so yeah, unfortunately, it does not look like something I'm going to be incorporating. This is the 630 entry right here, guys. So again, right here, this is against momentum. It has a 60% probability of it hitting. Overall weighted. Overall, just in general, is 55. Buys are at 37. Sells are at 66. This has a 2 out of 4 wins of the previous entries, and it's for a sell. So if you guys want to take this trade right here, it's currently running right now for a sell. It's not a target entry, but it is an entry with regard to the setups here. It has a 60% probability. It's not high enough for me to want to take it. Typically, I go for anything above 65. So this one over here is currently running. Let's see if it's a break and retest off the structure right there, or if it's going to kind of bounce around. So there's just a couple more entries here. 743 and 753. Unfortunately, this week, guys, no entries for me. As much as I wish to take entries today, there was no entries for me this whole freaking week. All right, so no, that right there did not play through. 730 against momentum. So would have taken a sell, would have lined up. So one loss for the day. And this is just all of the algo entries, not the ones that I would have taken or the target entries. It's just all the algo entries in general. All right, so I can start updating the spreadsheet right now. Show you guys the stats for this week and for this. The week was actually not super bad if we took every single entry that came up. So let me just go over here real quick and put this down. No entry, 735 was a win. Bunch of no entries here. 702 no entry. Seven seventeen no entry. Okay, so I'm gonna go and put this over here. So I'm just looking at the target entries because those are what's pretty much done with for this week. The target entries for this week actually did okay. They didn't do great, but they did okay for the most part. Um, okay, I'm just updating the spreadsheet here. All right, the spreadsheet is updated if anybody wants to take a look at it. For all of the trades for this week so far. Mainly the target entries are done because there's no more. There's still two more entries here for the for just the list in general. Next one's at 743. Here, let's see. Sam said, I don't know. I find the liquidity below yummy. Trend line one, want this to hunt it. 46.16. Let's see. So Sam says is 46.16 my London session. Um, Mine is at 46.06. 46.065. That's my London session low right there. Um, I don't know if it's adjusted because it might have adjusted. I don't know if you're identifying the one from today or the one from yesterday, right? Because here, let me see if I could replay it. Yeah, so this one right here is from the previous day. It's not from today. So if you're looking at the one from today, it's going to update a little later because you know how the days overlap. Um, yeah, because this doesn't cover for today's. I don't know if you're marking up the London session from today or if you're marking it from the previous day, which is Thursday. Because our time zones are different. I know you're not in the US, of course. I'm on West Coast time, just like PC. So it is this London low right here is from Thursday morning. Yeah, it's at 46.065. You're probably not on if you're not on YM, yours might be slightly off too. Because if you're on the CFD data, the pricing is not exactly the same. It's like I think it's off by like a couple hundred points. I think if that's the case, yours might line up exactly with this one because it's at 46,065. If you're on CFD charts, then I could probably move to a CFD chart. Let's see, US 30. Actually, the CFD chart's like way off from mine. I don't even see the London low on here. No, so this one's way off. Let's see, another US 30 chart. Yeah, no, I think yours might be lined up if you're on mine. But yeah, the CFD chart show that it's at 46,306. That's my London low. This is from previous day, of course, not from today. For why I'm over here, it's at 46. Yeah, unless this lines up with yours. If you see that this kind of lines up at around the same price, then it might. All right, guys, again, right here, huge, huge range like I talked about. Here we are as we come back into this middle point. We talked about this morning. Price is just pretty much ranging back and forth between these midpoints. Let's see. Ed is asking, how long do you think this kind of choppy market will last? Um, the thing is, the market this year is a lot different compared to last year, Ed. So if you were to compare this to last year, market was actually not choppier around this time. It was more directional. We had a lot of entries um, last November. So November 2024, it was more of a directional market. Traditionally, the market would typically become a little choppy closer to the holidays. So like say like next week, the whole week is usually pretty choppy. But for this year, it's been really different in a sense. It would be really different in a sense. So, I mean, typically, if we're talking about historical data, usually it starts to get choppy around like the week of Thanksgiving, but it's been choppy for the past 2 weeks already, and that's because of the government shutdown and other factors. Ed said, I imagine we got Trump to blame for this. The thing is, I feel like everybody wants to blame Trump for everything, and they're not wrong because when Biden was in house, we didn't have a government shutdown like that, but we also didn't have a volatile market. The thing is, we asked for this volatile market, right? We wanted this volatility to happen, but now that it's actually happening, it's just a little too crazy. The volatility is it's a little crazier than what people hope for, right? So I mean, yeah, I guess you can blame Trump for it, but in a sense, it's like we asked for this volatility, we wanted it. We just didn't want it to happen like this. Like I wanted to see volatility where prices climbing and climbing and climbing, or dropping and dropping and dropping, not where it's volatile but choppy, right? So yeah, I mean, in a sense, that's kind of like where it's at when it comes down to it. Let's see. Alad said price is a little like in high rocks when throwing the ball. It slows down before reversing and falling down. Basically, Alad, that's exactly what's happening, right? It's the momentum going up and then slowing down at the top and then coming right back down. And then vice versa, momentum coming down, slowing down here and coming right back up. Yeah, pretty spot on with that analogy. Let's see. Sam's asking, no, I'm not on New York time. I'm on West Coast time. Or my New York. Okay, let's see. Sorry. You're asking about so you said 46 162. Actually, I don't have anything at 46 162. I have my Asia high right here at 46.93, and then I got the London low at 46.65, and then we got the Asia low right here at 46.839. My New York low is at 46.786. I don't know where my New York high is at. Let me check. It's probably overlapped with one of these. No, the New York high is actually. Oh no, so for the session highs, these are from the previous day, Sam. So I'm not sure if that's what you're like looking for. If you're looking for the one from today, it doesn't update until the next day is over. These previous lows are from the previous session. So like if we're looking at the New York high from yesterday, it's way up top. It's right here. It's at 46,936. Because my session high low indicator, it identifies the session highs from the previous day. It doesn't identify the session for the same day. So I think that's why it might be a little off. I don't know if that's what you're looking at or if you're trying to find that. But what I have here is it marks up the session high from the previous day. So maybe that's why it doesn't line up with what you're looking at because yeah, if the thing is if you're looking at the London high or London low from today, which is from midnight, because the my time difference from you is like it's different. Uh if you're looking from basically my London low here is going to identify from 12 midnight to whenever London session closes, which I think is about 9 o'clock or 8 o'clock. Um West Coast time. If I was to shift this and change it to a different time zone, then it would line up with like maybe what you're looking for because you're on an opposite time zone basically. You're like I think 16 hours ahead or close to that, 12 to 16 hours ahead of ours. So like my midnight is like basically your 6 a.m. So yeah, just something there to keep in mind. Let's go back to the algo entries. The next one here is at 6:43, guys. So this one right here is going to be with momentum. We currently have a sell momentum right here. So with momentum, 62 probability weighted, 55% overall, 40% buys, 70% for sells. 2 out of 4 history over here. And it's looking like it's going to be for a sell. So this here does line up with what we are typically looking for. If this candle right here closes with a buy signal, then there's no entry. So unfortunately right here, guys, there's going to be no entry unless, yeah, there's just no entry there. So the reason why there's no entry right here at 643 is because the 643 entry right here was with momentum for a sell, right? There's a buy momentum which came up right here. So there's no entry there for a sell. If you want to just go based off the probabilities here for a sell and not look at momentum, then there would still be an opportunity there for entry. But obviously, like I mentioned before, I wouldn't take any trades unless I see the price action showing that there is a slowdown here for the push to the upside, right? This is the same problem that I ran into over here because I don't see price slowing down. I see the momentum actually pushing up. If I was to see price push up right here and it starts to slow down already, then okay, great. I'll see the reversal to the downside, but I don't exactly see that here right now. So there's nothing there. Yeah, Sam said, yep. I want it today. I don't care. Older if mitigated. Yeah. So I think that's why the sessions there don't line up with yours, Sam, because my sessions indicator identifies previous session high lows from previous days. So basically the day before. So the New York high low is not going to line up with what you're looking for. Basically, the New York high lows from today are going to show up on Monday. All right, let's see. James said, I mean, your algo entries in the chart, we document the outcomes? So we already did the test over a 3 to 5 year period, James. It wouldn't, the probabilities aren't good enough. So it wouldn't make sense for you to take it. There's no reason to take those types of trades. We just ran it through Python and we ran it over a 3 to 5 year period, and the probabilities they don't come out as profitable as it would be to just follow momentum. So yeah, there's no point. If I was to document that, it wouldn't make a difference because long term it's not going to be it's not going to be profitable or as profitable as if you went with momentum. So that's what I was trying to say. That's why we ran the data to see if it was actually profitable. If it was profitable, then great. We would mark it up because it would make sense to take those trades. But the thing is, you're going to get more entries following that. But in the long term, you're not going to end up more profitable than you would if you followed the momentum. So that's why there's no point in documenting it because the edge there isn't better than what we currently have. We have less entries, but the probability is a lot higher. If that makes sense, because you're going to be taking a lot more entries. Like for example, here, if you were to follow what I just mentioned, anything above 70%, there'd be a lot more entries here, right? Instead of just three target entries, there'd be about one, two, three, four, five, six, seven entries right there. But then again, looking at that there, I mean, these entries here probably would not have played through. Like looking at the 632 right here, the 632, if you took it for a buy, it would have lost because it would have stopped you out. The candles are too volatile. 35 over here. I mean, obviously that was a win. 639, that was for a sell. Let's see. That one would have won. So the thing is, you're overfitting, right? If you want to look for something like that, you're overfitting. You're looking for a reason to take a trade, but you need to go off the data. The data shows that it's not it's profitable, but it's not as profitable as if you just would have went with momentum. So that's the main reason why there's just no point in following that. I mean, if you want to take that and take more entries, you're probably going to end up at about the same, if not less. But you're going to eat up a lot of fees because you're paying fees and commissions per trade. So the fees and commissions are going to eat up into your account. So instead of taking like one or two trades off, or target entries with momentum, if you took like six or seven entries based off just the probabilities of, buy or sell, you would end up eating up the cost and fees because you would make about like 200 with one contract if you had a net positive win off one, and then you'd pay about like 200 or 300 in commissions and fees. And it just doesn't make sense, right? You're better off just taking more of the quality entries. Let's see. Darren said, I forgot this week was VIX and option expirations, usually high volatility during that time. Yeah, usually like during the ends of the month. I mean, we're not there yet, but we're getting close to it. Towards the end of the month, we tend to have that too. That's why, like, I try to be a little more cautious during the beginning of the month and during the end of the month, because you do get a lot of volatility during that time, Darren. All right, let's see. There was a buy MPS here that Sam mentioned. It looks like it would have pulled back a little too far though on that wick. That would have stopped it out before it went to target. But with the MPS V2s, you probably base it off the ATR. So like if you were to take that trade there as an MPS V2, it basically would be an 80-40. And I think it'd still be running right now. Yeah. That's if you're basing the trades off the ATR right here. Ah, man. I was really hoping we get into a trade today. Unfortunately, no trade. No trade for this week. So again, like I mentioned earlier, guys, it really sucks that there's no trades, but it also doesn't suck that I didn't have any losses this week. I think going into this week, and if I exited this week with a loss, I probably would have been pretty upset going into it because it probably could have been avoided. But again, there just wasn't anything for us to take here today, unfortunately. Fortunately, but unfortunately. So fortunately, we did not take any losses. Unfortunately, it's been a boring month so far for November, right? A really, really boring month. Like I'm used to taking at least one or two trades per week, but like for this whole week, I've just kind of been sitting stale. This whole week from the 17th till the 21st. It's been a while since I've had a week with no trades at all, right? All of October, I had at least one or two trades. All of September, we had a couple of trades. All of August, yeah, we had at least one trade for every week. It's been a long time since I had no trade. So looking over here just at my statistics, I took at least one trade every single week. It looks like, yeah, even for June, May. Actually, I don't think there's been a week where I haven't had any trades this whole year. That's pretty crazy, right? I mean, looking at the data over here, there hasn't been a week. Wow, that's interesting. That's crazy. Okay, yeah. So looking at the data here, I actually have not had a week where I didn't take a trade. This is the first week of this entire year where I didn't take a trade this whole week. I think that's why it's eating at me because I'm so used to taking at least one trade. But it's okay. I mean, this is just the market we're in right now. There just wasn't any. So technically, there was trades this week. It's just I didn't take the trades, right? Let's go to the spreadsheet real quick. So let's go over here real quick. These are all the target entries. So for this week so far, from Monday until Friday, there was actually, let's see, there was one, two, three, four, five, six entries for this week. I don't want to say chickened out of the position, but I decided not to take them. There were six entries for this week. So we had basically a three, two, minus one, plus two. So five, four, six. We had a 6R this week, actually. I think moving forward, I just might have to just take these trades, guys. I have to take my discretion out of this. My discretion is really preventing me from getting into these positions because from Monday until Friday, if we took basically, technically all we would have had a winning week with no losses because I would never have taken the 630 entry anyways. The only loss was at 632 yesterday. But for the rest of the week, pretty much, oh no, I take that back. There was one loss over here on Monday. But either way, there was one, two, three, four wins and just two losses. So I have to trust this algo, guys. I mean, honestly, I just have to trust it because looking at the data over here, and I'm glad that we have the spreadsheet because the spreadsheet's really showing us the true numbers, right? These are just target entries. If you take it without no discretion, don't care about like what the momentum's looking like, price action, any of that stuff. Just following the strategy as is, it should be in profit. So yeah, I mean, I guess I just gotta grow a pair and take these entries here. I gotta follow my strategy as it's supposed to be taken. So, okay, moving forward into the next week, I guess like a lot of these trades here could have been easily taken, but due to my discretion, this has kind of been holding me back a little bit. It's all good. I mean, we learn it. We live and we learn, right? Thing is, like we talked about this. James says, "Do you think it's your hedge that's holding you back?" In a sense, yeah, it is in a sense. I talked about this with Sam yesterday. The thing is, I have a lot of responsibility with the hedge and slippage. I think the slippage is what really threw me off over the past couple weeks. The hedge is what's really holding me back, really, from just taking these trades. Because the thing is, if I'm trading with a prop firm, if I blow the account, it's not a big deal, right? I could blow the account and start another account. With the hedge accounts, I'm not looking to blow people's accounts, right? I'm trying to conserve capital and be productive with their accounts. So like, just like what James said and what I talked about with Sam at the gym yesterday, managing accounts for the hedge fund, this is really what's kind of making me second think the entries a lot because the slippage is what's throwing me off. Looking over here at the stats, like I felt really bad for the people who lost this trade on Monday, right? Because I won the trade and like majority of people won it. About 90 to 95% of people won the trade. And there was maybe like three people who lost it on Monday. And that was mainly because of the slippage. I think as we move over to StoneX, I'm like fingers crossed, I'm hoping we move over to StoneX next week. Once you move over to StoneX, I'll be a little more comfortable with taking positions and not so worried about slippage. I think this here kind of threw me off a lot. Like if you guys traded with me like on the third, the first week in November, this really, because this week right here, there was extreme slippage. Like the volatility was so crazy. A lot of people were having, like not even just with the hedge fund, but in general, people were losing trades because slippage was so high. Um, that's kind of held me back from taking entries. Like for example, maybe not the 635 entry, but one of these other entries over here, because of the big spikes of these candles, I was always worried that maybe a handful of people would lose the trade or get in at a bad price where they would end up losing. So, yeah, James, I do think the hedge unfortunately does kind of hold me back a little bit. As we move over to StoneX, I'll be doing separate platforms. So I'll be trading my prop firm accounts on NinjaTrader, but I'll be moving over all of the hedge fund clients to StoneX. So I think once you make that move, I'm gonna be able to take trades on just the prop firm and then just take trades just for the hedge fund. So I'm really hoping by next week we can make that transition. And then yeah, because I'm looking out for everybody. I think for the most part, my main concern is like losing trades that aren't supposed to lose, right? I think that's probably the biggest concern for me. It's not that the strategy is not working. It's just the fact that the slippage is so bad on NinjaTrader that some people get kind of the short end of the stick, and I feel responsible for that. Jesus is asking, will we have to move our money from NinjaTrader to the new platform, or will that automatically happen? So there's a couple different options, Jesus, when it comes down to that period to that point. You can either do a full transfer of the account. Um, the account manager will walk you through that. So you'll fill out a form, basically give that form to Ninja, like, hey, we're moving all the money from here to here. And then you can just transfer it over that way. Or if you want to pull the money out and then remake the deposit into StoneX, you can do that. So there's two different options. It's either, and I'll put it right here, options for transition from NinjaTrader to StoneX. One, full transfer of account to new FCM, StoneX. Or two, withdrawal all funds, then deposit into a new account. So yeah, you have two options there. I mean, you can either fill out the form and just have them do a full transfer, or you can do withdraw the funds and then deposit into the new account. In a sense, it's the same thing. It's probably going to take the same amount of time. Uh, the first option might be faster though, because they would just transfer the funds directly from, or just they'll just move your account basically from NinjaTrader to StoneX, FCM to FCM. Let's see. Michael's asking, Sean, regarding the hedge fund, is there a breakdown on the 1 versus 3 contracts? Also, can we set up a StoneX account prior to transition? So unfortunately, no, you can't set up an account with StoneX yet because they're an institutional broker and they're not going to set up an account with you unless you have like a certain amount of funds to trade with them. They're not, I think you need like at least 100,000 to open up with them, or else they'll put you on like a separate broker. Like they'll probably still manage your account, but they'll put you not on StoneX directly. They'll put you on a different, like a retail side of things because they have an institutional side and they have a retail side. But you're better off just waiting. Honestly, you're just better off waiting because our account manager is going to put you directly onto the the institutional side. So like it's not like a regular broker where you just go to the website, you sign up. Like when we sign you up and onboard you to StoneX, or you're gonna have a specific account manager, and they're gonna walk you through the whole process because you're gonna have an institutional account, not a retail account, which gives you better spreads, better execution, better everything basically. Like you basically get all the benefits of trading with like a huge account, but you're trading with the fund basically. Yeah. So yeah, Michael, when that happens, hopefully by next week, we'll be able to get you on there. But all right, guys, if there's any other questions, feel free to put your questions in the chat. Let's see, the 753 entry right here was against momentum for a sell. This trade over here was for a loss, it looks like. Yeah, so it would have went against for a sell, and this thing actually didn't come down at all. Okay, so let me put the totals over here for the day, now that we have everything on here. 743 was no entry. And I'm doing this to show the transparency of the strategy, right? Whether you want to do the strategy based off of the every entry, or if you just want to base it off target entries, of course. So here we go with this right here. So here are the entries for this week. So if you took every single entry for this week, let's see, it'd be so -2 on Monday, +2 on Tuesday, that's break even, -1 on Wednesday, +1 on Thursday, that's break even, and then +2 on Friday. So if you took every trade, like literally every trade I listed for the algo, for this week, you would be at positive 2R. And then if you took every trade here that are just target entries, it would be 3, 5, 4, 6. You'd be 6R. So again, so this is another example of less is better, right? Because if you took every trade here, you'd be up 2R, but you'd pay a shit ton in fees and commissions, right? Because you took how many trades here? This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40. Basically 40 trades. So you pay 40 times 5. You pay 200 in commission. So like you basically would be break even for this week if you took every trade. This goes back to showing you that less is better, right? Because you would have paid 200 in commissions and fees, or maybe more than 200, actually paid maybe 300. So you probably would be negative for the week if you took every single trade and only came up 2R. Vice versa, if you do this over here, right, for just target entries 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. So this would be 17 times 5. You'd pay about 100 or 85 in commissions and fees, and then your profits would be 6R. So it'd be basically, so it'd be 100 times, yeah, 6. So you make 600 and then pay 85 in fees. So like this shows you that you're better off just taking target entries versus every single entry that comes up. It might not be the case every week, but for the most part, this week showed that you're better off taking just the target entries versus every single entry that comes up because you would end up paying, all of your profits out in fees and commissions. So, all right, guys, I think that's it for the day. If you guys have any more questions, feel free to hit me up on Discord. I think next week, hopefully the volatility, if it's not going to be, um, hopefully if the volatility is not super high, then I'll be able to take more entries with more confidence. But you can see here that the target entries worked out perfectly fine this week. It's just the volatility here kind of threw me off because I was worried that people would get stopped out or lose trades because of the volatility. But overall, I mean, this week would have been a good week overall if I just would have taken majority, if not all the trades here for target. So, okay, guys, I think that's it for the week. If you guys have any questions, feel free to hit me up. Otherwise, have a great weekend, guys. If it's raining where you are, like it is here in California, stay dry, and I'll see